Hello everyone, and welcome to this short training session about Brexit and VAT processing. In this video, we'll look at the key features that have been introduced into the Sage accounting software to support you with EU transactions post-Brexit. Just to make you aware, to determine the tax treatment of the transactions, Sage accounting uses a combination of postcode checks, whether the invoice includes goods or services, and whether postponed accounting or the £135 scheme applies. Therefore, it's really important that both your business postcode and that of your customer or supplier have been set up accurately. Here we're set up as a business in Belfast with a BT postcode. If we select our GB supplier, we can process as normal. No banner appears as no borders are being crossed. If we select our Irish supplier in Dublin, however, the banner appears to indicate that they are an EU supplier and reverse charge may apply. Finally, if we create an invoice for our Spanish supplier, again we're presented with the banner indicating that reverse charge applies and the tax treatment has changed to 0 rated. It's also key to check each line of the invoice to ensure they are correctly flagged as goods or standalone services if the option is available. It's the same for those processing in the Republic of Ireland. So as a comparison, let's take a look at a company set up with a Dublin address. First, if we select the GB supplier, the banner indicates that Great Britain is outside of the EU and may be charged under the reverse charge mechanism. If we change this to our Northern Ireland supplier, the banner changes to indicate that they're in the EU and again this may be charged under reverse charge. So it's key to ensure that the item is correctly flagged as goods or services using the drop-down option. Finally, if we choose our supplier from Spain, the banner disappears and the transaction is posted as normal for invoices from the EU. If you look at the top of the slide, the first feature we'll be adding to Sage Business Cloud Accounting is the option to activate postponed accounting. This can be found within Financial Settings and under Accounting Dates and VAT Settings. Once activated, this can be overridden on an invoice-by-invoice basis. The checkbox then sets the defaults. For Ireland, it sets the defaults for importer invoices and treatment for the rest of the world import transactions. For the UK, it sets the default for importer invoices and always estimates VAT for a rest of the world purchase invoice. If you don't want to estimate VAT, you can select 0 rate. If you look at the two screenshots underneath, you also need to indicate which of your suppliers are import agents. On current supplier records, this can be indicated within the account details, and for new suppliers, this can be selected when creating the record. Let's take a look at how this works on an invoice. Once a supplier who's been flagged as an import agent is selected, the new postponed accounting box appears. This can be cleared if it does not apply to this transaction. If selected, the transaction will be posted with postponed accounting rules and will automatically impact boxes 1, 4 and 7 on the VAT return. When reviewing an invoice already posted, if postponed accounting was applied, this will clearly show in the banner to indicate that this was the case. Next, we'll take a look at how Sage Business Cloud Accounting takes care of those imports which fall under the £135 threshold. As you can see here, we begin with a GB supplier selected. However, as soon as we change the supplier to our EU supplier in Spain, the banner changes to reflect that the customer is in the EU and reverse charge may apply. The checkbox to apply the £135 consignment rule also appears. Remember, it is here that we need to indicate the invoices for goods to be eligible for the scheme. Some additional reports have been introduced to enable you to reconcile your VAT returns. Outside of postponed accounting, import VAT is estimated until further documentation is received. The Overseas Purchase of Goods report will assist you when reconciling your VAT return, but it will also allow you to view rest of the world purchases, EU purchases, and import invoices, along with the associated postponed VAT. There is also the Overseas Sales of Goods report, which allows you to differentiate between your rest of the world and EU sales. There are limitations on certain transactions being used with overseas contacts. Quick entries cannot be used for overseas suppliers. The transaction must be entered as an invoice. Similarly, within bank, other payments and other receipts cannot be used for customers and suppliers overseas. These are blocked, and messages will indicate this. All that remains for me to say is thank you very much for watching this video. Stay safe, and I'm sure I'll speak to you again very soon.